On today's Hot Sheet, I'm discussing the latest PCE report, what impact that had from Friday on inflation, housing inventory, pending home sales, and some of this tariff news over the weekend. What should we be thinking about that for housing? Today is Monday, February 3rd, 2025. I'm Byron Lazine, and the Hot Sheet starts now. All right, welcome into the Hot Sheet here on this February kickoff, the first Hot Sheet of the new month. 2025 is moving fast. Let me know in the live chat which market you are tuning in from. If you're new to the Hot Sheet, we do this every Monday through Thursday, live at 9:30 on the East, 6:30 on the West. Make sure you drop right down. It's totally free. And hit the subscribe, hit the notification bell so you don't miss one of the Hot Sheets every Monday through Thursday. The markets are open. It's the only live show on the internet that gives you a 24-hour look back on housing. And speaking of free, I want to make sure that you have your free seat to this Wednesday's BAM Pro Bowl number 2 for BAM. The Pro Bowl is the Super Bowl of real estate knowledge. This is one of our 4 virtual events of the year. And by the way, this event shouldn't be free, but it is. There is a limited seat arrangement. We have 5,000. Last year we had over 4,000. So we will come kickoff, go over 5,000. The reason this shouldn't be free, not just because we have some of the most amazing speakers lined up for our kickoff event here of the year, Sharon Srivatsa, Jared James, we have Ken Pozak, we have Tina Call, we have Kofi Narte. Myself and Eric, the broke agent, are also going to be doing play-by-play commentary. We also have so much entertainment. This is why this thing shouldn't be free. We have so much entertainment packed in that if you were at last year's Pro Bowl, Pro Bowl 2's next level. If you weren't there and you end up here at this Pro Bowl, BAMProBowl.com to get your free ticket, you're going to be like, what the heck? I mean, the amount of energy, attention, detail that goes into these virtual events are just absolutely unbelievable. So excited to share that time with you guys. Wednesday, we kick off at noon Eastern. Grab your seat over at BAMProBowl.com. BAMX members, you'll get access to the replay. That's the only way to get the replay access. So be there live or get the replay living inside of BAMX. So there you go. All right, let's get into this PCE really quick. I just want to give an overview if you missed it over the weekend. Obviously, we had Jerome Powell and the FOMC's decision last week to hold firm on the rate. That decision was expected. Nobody anticipated anything different. We're only anticipating 2, maybe 3 rate cuts from the FOMC here over the course of 2025. We're 1 out of the 8 meetings down. If we look forward into the next meeting, which will be in March, we have an 85% chance, according to CME Group, that there is again not going to be a cut. So only a 15% chance. A lot can change. We're going to, over the next 44 days, which is when the next meeting kicks off, we're going to take in a lot of data. And obviously all the inflation data is going to be a part of that. So just looking at the PCE, which is, the Fed's favorite target. If we take a look at what happened there on Friday, we saw that for December 2024, the PCE did rise 0.4%. Okay. That was personal income. Sorry. Personal income rose 0.4%. The PCE increased 0.7%. And the PCE price index rose 2.6% year over year. Now, 2.6 is obviously above the 2% target. We're not expecting 2% target at any point in 2025. What the headline really, the important takeaway here from this number, the PCE, is that it met expectations. Okay, so we met expectations. So we didn't see a pop in the 10-year on Friday. We're coming into this Monday, stock market not doing great. We'll get into that with the tariff stuff. But the 10-year is just kind of just chilling at the low point that we've seen over the last 30 days. So still not where we want it to be, but we didn't see any kind of bump up there. Personal income increased 92 billion. That was that 0.4%. DPI, disposable personal income, increased 79.7 billion. The PCE, again, personal consumption expenditure, up 0.7%. Okay. Notable consumer spending changes. Motor vehicle and parts, that was up 17%. Healthcare up 12%. Gasoline and other energy goods up 11.3%. By the way, oil up today after tariffs. Housing and utilities up 5.8%. Transportation services up 6.5%. Food and beverage up 5%. Financial services and insurance up 2.9%. These are all month over month changes. Okay, as of December. Recreation services plus 3.7%. So those are the big movers on consumer spending changes when you go November over December. Overall, PCE coming in as expected. So no big movement, no big disruption there. Disposable personal income, while that number 79 billion is a huge number, overall trend there is that is moving down, slowly, but moving down. So less disposable income coming into the market, which obviously the concern with more disposable income would be that you do see obviously an uptick in inflation again. All right, let's get into, as we do every single Monday, we look at the macro, the national numbers for active inventory, for new listings, and just kind of set the week off straight on what's going on a macro level. A lot of these numbers, and we're going to get into pending home sales is released by NAR as well. A lot of these macro numbers, macro headlines, are what your consumers are hearing. Whether it be a Fox Business, a CNN Business, Wall Street Journal, what have you, a national macro number is the one that they consume about the housing market and take that to be true for their particular market. It's our jobs as the professional to understand the macro. Certainly, we would never want to ignore the macro and connect it to the micro, your neighborhood, your market, your city, your county, and connect the dots for consumers so that you have the full picture, the full landscape of what's happening. So let's dive right in here on active listings right now. So national single family housing inventory. So we're looking at single family. Okay. If we take a look, and this is according to Altos's research here, if we take a look at single family active listings right now, we're starting 2025 right now as we get into February with 26% more inventory than 2024, actually 28%, sorry, at where we sit right now than this point last year. If we just take a look at the numbers, we're talking about 2,000, a little less than 2,000, about 1,500 on active inventory drop on single families from last week to this week. From comparison to last year's time right now versus right now today, we're at 635,000 on active single family homes versus a 497,000 reading at the same time last year. At this time last year, we had dropped from just over 500,000 to below 500,000. So comfortably above 634. I love this line. If you're watching and not listening, the line from the beginning of January to today, this first week in February is flat on active listings. So that is kind of what you want to see. I mean, obviously 21 and 22 were odd number years, and even 23, you saw this number really going down. We want to see active listings similar to what everybody that's watching right now can see was the case in 2019. More of a flat approach through February on active inventory. Then inventory start to climb in the spring. That's more normal. That's more natural. That's a little bit healthier. And we're seeing that here to start this year, which gives me hope that we will see an increase in inventory nationally as we get into March, April, May. We're going to see these numbers jump up and beat the highs of last year. In order to do that, one of the things that can really drive that number would be new single family listings. We're coming in at 48,000, about 49,000 last week. We've kind of basically just been in line on new listings with 24 and 23 in comparison. We're not seeing anything jump off the charts here as it relates to new single family listings. Last year at this time was about almost 5,000 less, but we're not seeing, any of these levels on new listings that we saw in 17 or 18 or more normalized markets. So we're still trending near what 23 and 24 was so far 4 weeks in, which again was all-time lows as you look at history for new listings. So, we're not under those numbers. We're not really, jumping off the page. The chart's not jumping up yet. Hopefully we'll see that. Now, obviously there's been downward pressure on the rates. We're going to look at pending home sales. And, I think that's going to hold up some more of that inventory as we've seen the last couple of years. Price cuts right now are moving up past where they were in 24 and in 23. We're slightly above 23 and we're a couple percentage points above 24, still in a normal range where a third of properties will do a price reduction before selling. We're at over 33%. That number, though, usually declines this time of year, and we're kind of flattening out on the chart here. That dark red is 2025. So we're seeing some sellers in certain areas, say, I'm just not getting the activity that I want, and I really want to sell, and they're going and making that move. And so that's going to be different in every single market. Obviously, pricing it right in those markets where you have higher inventory is really important. Altos, we're going to get into NAR's numbers here on total home sale contracts pending for December. We got that number out, but according to Altos, 2025 is starting with 282,000 plus homes in contract, which would be 2 less single family homes in contract versus the same time last year. If you can see the chart in front of me, obviously BAMX members, you can grab this stuff inside of BAMX. But this line is actually taking that sharp increase that I didn't want to see this. That's what you would expect pending sales to really over the next 3 months go up at a very rapid pace over the next 3 months, February, March, April, before hitting that peak somewhere in May and then declining out the rest of the year. So we are on the upswing right now, but 2% behind where we are last year. Why are we 2% behind where we are last year? We have a 30-year fix that has been very, tight above 7%, very stingy, not moving. There hasn't been a lot of volatility yet this year. It's just been up, elevated above 7%, and that's going to continue to put pressure. And we're seeing it with the mortgage application index, right? Look at 2025 mortgage applications. We've had 2 positive reads. We've had 2 positive reads and 1 flat read to begin the year. But just compare this time of year to last year or 2023, and we're well below the demand on mortgage applications. So you usually see that late January, early February pop. We haven't seen it. Why? Rates are putting pressure on when potential would-be buyers are pulling the trigger on that application. So we'll see if that plays out here in early February, where you typically do get a couple weeks of the highest levels of mortgage application data for the whole year. We'll see if that gets suppressed and gets moved out a little bit later on in the spring. One of the things, to keep in mind is like what's going to happen with the greater economy here as we take a look at this tariff enforcement over the weekend. Canada, Mexico, 25% tariffs, China, 10% tariff. Right now, mortgage rates have stayed calm, unlike what we're seeing over in the stock market. Okay, so the headline there, mortgage rates are staying calm before this tariff enforcement, which did actually happen. One of the things that I was just digging into Logan's, thoughts here, Logan Motoshami over at Housing Wire. What does he think about the tariffs? Like, we're tracking mortgage rates. Okay, flat. He put out this tweet. He doesn't believe tariffs are a long-term. This is just a belief. Okay. So He's got reasons to back it up. Doesn't believe tariffs are a long-term, solution here. And you see here the subtweet from this Meredith McGraw. The president says he will speak with the Canadian PM and Mexican leaders tomorrow. This was only 14 hours ago. So Logan puts the meme up there of the poker table and basically saying, hey, he believes that Trump is bluffing here on these tariffs. Yes, they've been imposed, but as quickly as they're being put onto these countries, they can be taken off. So listen, tariffs for the long term would not be good for a number of things. You're seeing, so the US dollar has strengthened considerably now. So US dollar versus like the Canadian dollar, it's like, the US dollar is very strong, which is actually like, oh, strong dollar, good. No, the president does not want that. The economists don't want that. It makes it harder to actually export goods when we have the strong dollar. The other part of this here is when we look at right now, 10 years, stable. The other part here to look at with these tariffs is, again, it's probably a negotiating, but if they were to be a major economic policy, they would have to be implemented as soon as possible. I don't understand this because it's like they have been implemented pretty quickly here. But here's the line that I thought was a big takeaway. You would need them to be in place for many years to foster real change. So, this is, again, where you got to like take some of the stuff with like, is this just to facilitate discussions? Secure exemptions for specific specific groups and create favorable trade deals. They're not standalone measures. Instead, nations are going to react with their own tariffs. We're already seeing that, which could lead to a full-blown trade war, and that ultimately isn't going to benefit anyone. So it appears that the position that Logan Mohtashami over at Housing Wire is taking is, hey, this is just going to be a bluffing move or some type of negotiation move. We shall see. If we just switch over to like what's going on right now in the markets, look at this. Look at these numbers here. Dow is down over 500 points. So the markets do not like these tariffs. S&P down 1.6%. NASDAQ's down 2%. We're going to check in. We'll check in right now on the 10-year. If we look at the 10-year, look at the 10-year for us seems to be, again, anything that is near crisis level. I'm not calling the tariffs a crisis or anything like that. But anything that starts to potentially slow down the economy in a big way, job break, all those kind of things, ends up at times benefiting the 10-year. And look at this. You have a 10-year now down to the lowest level in 30 days. So maybe we get under 7% on the 30-year fix. We shall see. Let's jump in now on pending home sales data coming out in December. For all the good momentum we had early fourth quarter on pending home sales. Wow, pending home sales are up. Pending home sales are up. December brought it back to reality a little bit. And remember why. December, you saw those increase in the 30-year fix. Pending home sales in December fell 5.5%. So let's just break this down regionally. The index coming in from NAR is at 74.2. You're looking for 100 for a normal market per 2001. So we're nowhere near a normal market on pending home sales, way below normal, month over month down 5.5%. You see the South is the only one hanging in there, only moved down 2.7% from November to December. The South would include states like Florida, Texas, all of the Gulf Coast states. You also have Carolinas and Georgia and Virginia, and all those states are in that southeast region, coming in at a 90.6 month over month, down 2.7. The Midwest is doing the next best as it relates to pending home sales, only down 4.9% month over month. Their index is up at a 74.3. After that, you'd have the Northeast, but down 8.1% in the Northeast, and a really low index of 62.3 versus the 100 2001 metric. and the West is at down 10.3% month over month and at a 57.7. So there you go. Pending home sales really moving down in December. You might see similar numbers as we look back on January. I know some areas feel like, hey, we've got more activity. I'd love, we're now in February, like pull your MLS stats. Like, were you up or down on pending home sales per last January? Okay. December was down nationally. Well, how does that compare to your market? And, so there's going to be a lot of markets that are down. Nationally, we're down 5.5%. That's a big number. And the biggest pressure point on that is the interest rates. And that's what the chief economist over at NAR coming out of the cave said. After 4 straight months of gains in contract signings, one step back is not welcome news, but it's not entirely surprising. And the time of year, I'm not surprised either. Economic data never moves in a straight line. High mortgage rates have not significantly dented housing demand due to greater numbers of cash transactions. But I would say that the amount of sales have been dented, whether you have cash or not. You take cash out, whoa, that would be a scary sight. So there you go on pending home sales down. The trend is, even Altos Research, we're down 2% from last year. So looks like as more data comes in January, we're slightly down here on pending home sales. That being said, a lot of you guys here on the hot sheet, a lot of the agents that are engaged on being sharp every single day, having confident responses to consumers, being engaged in their community, producing the right level of content and data and knowing the data inside and out. Those agents right now are like, hey, I'm up, or, my business personally is up. So we are seeing a shift on, obviously, those really engaged, those agents of change, those ones that are knowledge brokers, grabbing more of the pie. There's no question about that right now. So maybe this market is working for you. Maybe this market is like, maybe you don't want it to go back to a crazy market. Laura says Seattle is up 25% year over year. Pop that one up, Haley. And is that pending home sales, Laura? So that's a 30% difference than nationally. If Laura, that's what you're talking about, pending sales, I'm assuming that's the conversation. So I'm assuming that's what you're talking about. Pending home sales up in Seattle, 25% year over year. Now, when you go year over year, is that January to January? Obviously, the NAR numbers were December. Be curious if you're pulling that from January or December, because there can be fluctuations. Obviously, 25% is a huge number, but 25%, huge number for Seattle. So December to December. So that's apples to apples on Seattle. So look at that, up 25%. That's going to be an outlier versus the rest of the country. And for Laura's market, Seattle, that's an outlier for what's happening in the West. The West was down 10.8% as a region on pending home sales, yet Seattle up 25%. So huge numbers there for Laura. Let's jump into, speaking of cash, Lawrence, you bringing up those cash markets. Let's just jump into what's going on right now from our friends over at Zoodealio. By the way, every BAMX member gets access to Zoodealio to generate cash offers on their listings. Walking into a listing appointment with 4 cash offers. Zoodealio platform helps you get more listings, and they break down every single week the top 10 housing markets for cash offers. This is the week ending January 31st. You've got Vegas, Atlanta, Marietta, Los Angeles, and Fort Lauderdale. Look at Los Angeles now climbing the list after the horrific fires. You've got Los Angeles at number 4 on cash offers, Lauderdale at 5, Phoenix, Henderson, Nevada, Houston, Tampa, and Orlando make up your top 10 for top 10 housing markets with cash offers right now. All right. Make sure that you're signed up. You've got your seat secured. We're going to obviously cap this year at 5,000. Last year, we almost hit the 5,000 mark for BAM Pro Bowl. BAMProBowl.com is where you can sign up to get your seat for not tomorrow. I think I said tomorrow, but Wednesday at noon Eastern. Make sure that you go to BAMProBowl.com, secure your seat. You can either, there's only two ways to watch it. You watch it live Wednesday at noon, or you can catch the replay inside of BAMX. The live experience is where all the action is. So even BAMX members, make sure you're over there live on Pro Bowl. A ton of entertainment built in there. We're starting the week out at a 7.05 reading. We had that Thursday and Friday. Moving slightly down throughout the week. Started the week last week at 7.07. This type of consistency or lack of volatility in the 30-year fixed, lenders will tell you this is what you would typically see. It's been a while since we've seen it be that steady throughout a year. Look at the volatility just in the last 12 months. Maybe we slip below 7% with where that 10-year is. That would be a welcome sign. All right. Appreciate all you guys. Hope everybody has a great start to the week. Make sure you subscribe, hit the notification bell here to the BAM YouTube channel. Or if you listen to the replay on Spotify or Apple of the hot sheet, we're available there as well. If you listen later on in the day, if you're listening right now, love for you to consider leaving a review on one of those two platforms. Thank you so much. I'll see you back here tomorrow and, of course, at the Pro Bowl on Wednesday. Until then, toodaloo.